Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of November 28th through December 2nd, where we'll see how we can find Cyber Monday stock market sales. So again, thank you for joining us for part one of our weekly trading game plan. Good morning, Spacula. Thank you for joining us. Thank you very much for that super chat. Glad to see you. I hope all of our fellow Beach Bum traders had a very happy Thanksgiving as well as for your families. Hopefully, you're having a great Thanksgiving holiday weekend. Again, hopefully, you took some time to spend with your family, relax, decompress, and are ready to go for the next week of November 28th through December 2nd. Monday is Cyber Monday. Friday was Black Friday. So again, we're in the big holiday shopping season. Good morning, Doug M. Thank you also for joining us. So we'll get started. We'll do our market analysis. We'll look at the shortened holiday week last week for Thanksgiving, and then we'll prepare for our strategies for this coming week of November 28th through December 2nd. And then tomorrow we'll come back and we'll select our individual stocks to put on our various watch lists for potential trades this week. So let's get started. So here's our Google document with our notes for this week's weekly trading game plan, and you should be able to find a link to this Google document. It's public in the description box below, and/or I'll put it in a comment. We store all of our Google documents for our notes for our weekly trading game plans in a public folder on a Google Drive, and you can find a link to that Google Drive in the description box below. Has links to additional videos, all the tools that we're using, etc. Good morning, Ricky Khan. Glad to see you. Thank you for joining us. So if you have not already seen our previous video on how to make money trading during Thanksgiving week, we would recommend that. It also talks about how to make money trading during Cyber Monday. So it also covers Cyber Monday. So I won't reiterate that here. So again, you can access that video, and it talks about various trends, strategies, etc. for making money trading during Cyber Monday as well. And we'll talk about some additional strategies at the end. So good morning, David Spielvogel. Thank you for joining us. So we'll jump in and look at how the market ended on the shortened day yesterday. Markets closed at 1 p.m. yesterday. Again, as we discussed in this video about trading during Thanksgiving week, and we also have another video about trading during holiday weeks. Holiday weeks tend to be low volume, and we saw that this past week. It was relatively low volume, had some volatility in part due to the low volume. And good morning, Flip of the Shippa. Thank you for joining us. Glad to see you again. Hope you all had a happy Thanksgiving holiday as well. So we see the Dow ended up, NASDAQ ended down, S&P ended down. You can see it was kind of choppy. We see kind of mixed, advancers, decliners, highs and lows kind of mixed. We still have the majority, almost 70% above the 50-day moving average, and still a majority 62% below their 200-day. So it's still showing, FinBiz is showing a bullish indicator. You can see a lot of the FANG stocks, the megatech stocks ended up down. We see some healthcare ended up. Industrials, Dow heavy industrials ended up. Sector rotation into utilities and financials. So we see bullish pattern. Still a lot of discussion about FTX. Winning week with rate outlook and focus. Energy was very volatile. Oil took a dive at one point last week. Natural gas kind of spiked up. Again, very volatile. Right now, oil is down to 76, so it was close to its lows again. Natural gas spiked up to high 7s and then came back down. We see gold running up a bit. We see at one time the foreign currencies made some gains against the dollar, and then they had a steep decline towards the end. So the euro's still above parity. And then we saw the treasuries dip below 4. They're still sitting below 4, still pretty inverted. So we'll see that all in the futures as well. So let's look at the indices, see where we're sitting right now. So again, we see the SPY it was pretty choppy, didn't make a lot of progress, pretty consolidation. We had dojis on the weeklies from last week. Again, we don't see a whole lot of progress. There was the doji from last week, made kind of a little move up. Not a lot of progress, sitting kind of on that 20 week moving average. It's still significantly below the 50. Look at the Dow. Dow probably did pretty well. Yep, it broke above its moving average. It's tested, broke. It looks like it's breaking out above that high. So the Dow is definitely showing strength. Dow might be breaking out of its bear market. Might be headed towards a bull market in the Dow. Look at the Qs. Nasdaq. NASDAQ isn't faring as well. You can see it's hitting heavy resistance on that 20 week moving average. So it tested and got rejected off of that moving average. Again, NASDAQ looks a lot weaker. Russell's kind of squeezing between its moving averages. Looks like it just consolidated pretty flat. Look at the VIX. The VIX has been retracing, reverting to its mean. We can see it sitting right in the, here it's showing in 22. This is the VIX futures. If I actually look at the VIX in Thinkorswim right now, it's sitting at 20.5. So again, it's been generally reverting. It had a little bit of a perk up yesterday, which isn't terribly uncommon after you have a day off, or it'll probably perk up a little bit over the weekend. So, we might get a little perk on Monday, but again, I expect the VIX to continue to retrace, revert to its mean, unless there's some event that causes an increase in volatility, which we don't really have anything coming up right away until we get to the Fed decision that we'll see on the calendar, which is December 13th and 14th. So going into that, again, tomorrow, I'll talk more about how we're planning to play the volatility, the VIX going into the Fed rate decision on the 13th, 14th. So Flippa says, yep, the Dow has been strong and resilient. Yeah, the Dow is definitely outperforming. The NASDAQ's definitely underperforming. So just a quick reminder, disclaimer, none of our videos are financial advice. We're not financial advisors. All of this is for educational and entertainment purposes only. Let me look at BTI, the total market index, just real quickly. So on a daily, we see it really, again, didn't make a whole lot of progress, just kind of oscillated, consolidated. It's it very much like the S&P is sitting just on top of that 20-week moving average, still quite a bit below the 50. So again, market's really just kind of chopping right now and not making a whole lot of progress. And again, tomorrow, I'm going to talk more about an additional option strategy that I've started to test more with using cash secured puts, and how I think a couple option strategies, both covered calls and cash secured puts, may be a good way to kind of generate small amounts of money in a choppy market like this. So again, I'll talk about that in more detail tomorrow. So let's look at the groups, the sectors. Again, seeing a lot of sector rotation. We saw Friday, the shortened day, we got a rotation into utilities, into real estate, into financials, healthcare, and out of energy, out of technology, out of basic materials. For the week, again, basic materials recovered some, but again, a rotation back into utilities and real estate, and pretty much out of energy. So again, we're constantly seeing that rotation in and out of energy. So, but for the month, basic materials are still strong. Energy's weakened a little bit. Again, we've seen profit taking because for the quarter, energy and basic materials, financial, healthcare were the strongest. So again, profit taking in energy, and otherwise, a lot of rotation. So again, keep an eye on these sectors. We're again in the choppy markets. We're seeing a lot of sector rotation, money going in and out of the sectors, and there's opportunities there as well as in and out of industries within the sector. So last week we talked about coal being at the bottom. Now we see coals up at the top. REITs were down at the bottom. Now the REITs are up at the top. So again, we're going to keep seeing these kind of rotations. So I tend to go to the bottom and see, okay, who's at the bottom? Well, silver, copper, aluminum, back at the bottom. Remember a couple weeks ago, aluminum was at the bottom and then it rose to the top and now it's back at the bottom. So again, not be surprising to see another rotation into some of these basic materials, gold, silver, copper, aluminum. So also semiconductors, and we'll look at semiconductors a little bit tomorrow. Talk about the ETFs you can use to long and short semiconductors, SOXL and SOXS. We'll take a look at those. You see the oil again went down to 76, so it really was near its recent lows. See though for the week, silver was strong, coal was strong. Gold was strong for the week. So again, you see these rotations in and out. Uranium's still up. So, but oil and gas is down at the bottom. So I wouldn't be at all surprised to see a rotation into oil and gas early next week. Again, we see solar's been strong for the month, and that's another one they rotate in and out of. You'll see solar at the top at one day and then at the bottom the next. So again, watch these sector and industry rotations for potential opportunities. So now let's talk about the economic data we did get. It was relatively light week. Let me open up the investing.com calendar and then I'll go over the highlights that I have. Let me grab a drink a sec. Welcome, Alan Krentz. Glad to see you. Thank you for joining us. Okay, so Wednesday we got some mortgage data. Let me zoom this out a little bit. So again, mortgages are still high. It did come down a little bit. So it's still 7%. We got continuing jobless claims. So we got jobless claims data on Wednesday. You see continuing is higher than expected and initial was higher than expected. So again, this gave the markets a little bit of exuberance. Not that they're wishing people to lose jobs, but if unemployment's going up, the risk of recession, they're thinking, well, maybe the Fed will lay off the higher interest rate hikes, and now I guess the probability of a 50 basis point hike in December is kind of the average consensus. Whether it's 50 or 75, bottom line is still going up. Also, I heard mention, this durable goods orders was high, and somebody mentioned, didn't somebody tell the purchasing agents of these enterprises that we're in a recession or headed into a recession? There may be a number of reasons why enterprises are spending money right now. Part of it may be the end of the year. Also with high inflation, if things are going to be more expensive next year, then you might want to buy it this year. Also, if they're going to start taxing profits and taxing buybacks if there's something you're going to buy anyway, and it's something that you need for your business. Again, with high inflation, etc., it might be something you want to buy now. So again, we saw jobless claims peak up a little bit, although it's still pretty resilient. CPMI was a little low. Manufacturing PMI, services PMI was a little low. So again, that's the weakening of the economy in general. And we got sentiment data was a little bit better, not a lot better, but a little bit better. Inflation expectations are still around 5%. Housing is still in a recession. Crude oil inventories depleted, and yet, later in the week we saw a decline in oil prices. So again, I don't see a lot of correlation between the inventory numbers and the oil prices. Same way with natural gas. Again, a pretty significant depletion of natural gas storage, and yet the price of natural gas ended up over 7 at one point. So same way with the oil rigs, as they're slowly increasing. So again, the prices tend to have not been as correlated to the supply as one would have thought. Thank you, Specula, for reminding everyone that, yes, we have a Patreon. If you're willing and able to help support us to produce these kinds of live streams and videos, etc., we would love it if you joined our Patreon, choose a membership, and help support our community and the continued growth of our community. So thank you again, Specula, for the reminder. So then we also had the FOMC meeting minutes come out on Wednesday, and really there wasn't anything significantly different. Pretty much ongoing rate hikes are appropriate. Again, all this is stuff we've been hearing from the Fed president's speeches. Pretty much we know that. The market did get some exuberance that it sounded like expect smaller increases in interest rates will soon be appropriate as the threat of recession grows. So again, they took that to mean, well, maybe they won't go 75 in December, maybe they'll only go 50, but they're going to keep going up. So again, that was, and again, the news, and you can read this article via the link in this document, slower rate hikes as the recession threat grows. So again, the market took some bullishness from that, and tried to run up a little bit. So we'll see if that trend continues. Then Thanksgiving. Hopefully you all had a wonderful Thanksgiving. Hopefully you saw our Happy Thanksgiving memes and videos. Again, we're very thankful for all of you in our community and for your support and continued support. And then markets were open until 1 yesterday. Again, it was pretty low volume, a little choppy. So let's see if I missed anything from this week. There's not a whole lot, and it was a short week. So it looks like we covered that pretty well. So let's see what we've got coming up for next week. So Monday, a lot of commodity stuff. Tuesday, housing's pretty standard. Still got some Fed speakers, so it might be a little bit of volatility if they come out dissenting and want to go faster or slower. Get GDP data for quarter 3 on Wednesday. So again, that'll tell us how the economy is. Are we in a recession, going into a recession? So we might get some volatility around that GDP data. Consumer spending, inventories, job openings. So again, it's expected fewer job openings, people canceling their job openings, and oil inventories. Beige book is again the Fed's notes. And we got an OPEC meeting on Thursday. The discussion is they may cut production further. That should push prices up. Got challenger job cuts again. We expect and jobless claims. So again, we expect these to keep going up, although they're expecting initial to be down a little bit, continuing to be up a little bit. And we get PCE, so inflation data, ISM. So we've got a variety of data that could create some volatility, especially if it's pointing in a direct a direction other than what the market is expecting. The market's currently expecting the Fed to only, to slow the rate hikes, go maybe 50 in December instead of 75. If inflation's higher or the unemployment's not as weak as it was, then, the risk of a 75 will increase. So let's also quickly look at earnings here. While we're here, you can look at the earnings calendar. We've still got quite a bit of earnings for next week. So we got Pinduoduo, so some Chinese tech, some banks. And again, you can look at this all in more detail, and I'll show you in the market screen in Webull where you can get a near term. Looks like quite a few Chinese, so listen to those. So again, it looks like we got quite a bit, so I'll let you look through that, see if anything that you're looking to buy, currently own, in a sector that you're looking to buy. I would highly recommend you keep an eye on those. And then listen, did they beat? Did they miss? Because anybody that misses or gives poor guidance going forward is going to be punished pretty severely. If they beat, they may be rewarded, and it may have a sentiment effect on other stocks in that sector. Okay. Ellen Krantz asks, what's your thoughts on Credit Suisse? I'm in USOI. Should I be worried? I'm not. I'm in USOI too, and I'm not worried about that. I don't think they'll have any effect on USOI. However, they're having to restructure, deal with their solvency. It's going to affect their stock price. I don't think it's going to affect any of their ETNs. We're in SLVO, GLDI, and USOI, which are all Credit Suisse ETNs, and again, I don't think it's going to have any effect on those directly, because again, that's making money for them. So again, the next FOMC meeting is December 13th and 14th. So we've got a couple weeks, before the next interest rate hike. We talked a couple weeks ago that, in my humble opinion, the bear's in hibernation unless someone pokes the bear, and I think we're still in that position. You saw in our previous videos as well, this seasonally is a very positive for the stock market. We're coming out of the midterm elections. That's positive in terms of the election cycle. Also, November and December tend to be the best months for stocks, and we'll talk about going into a potential Santa rally. What is a Santa rally, etc. And we'll also talk about the effects of tax loss harvesting, tax loss selling in the upcoming weeks. So we'll talk about all of those in the next coming weeks, and the positive and negative influences those will have through the rest of the year. But again, in general, this is a good season for the market. So again, unless something happens, to poke the bear, it's a good time to find Cyber Monday stock market sales. So, and also encourage people to get into the market. Here's an opportunity. The market's still relatively low, and should head up through the end of the year, except for the tax loss harvesting, tax loss selling, which again we'll talk about the impact of that in subsequent weeks. So let me grab a drink. My voice is getting a little scratchy, and then we'll jump over to Webull and look at the market screen. And thank you for sharing that, Alan. Yeah, that's good intel as to if you all have been out shopping on Black Friday, etc. Share with the community what you see. How is sales for these retailers? Do you see what's the traffic look like at these retailers? And also, I heard some retailers are having outages. So some have a glut of inventory, and some have a deficiency of inventory. So it's very sporadic, very choppy. So if we look at the market screen in Webull, this is the online browser version of Webull. Just a quick reminder again, that Webull's still offering 12 free stocks when you open and fund an account. As you'll see, we use Webull as our favorite trading platform. We use it for market analysis, as you'll see, also for due diligence, and we do the majority of our trading in Webull. And again, you can trade from 4 a.m. to 8 p.m. And there are some nice opportunities to be able to trade at 4 a.m. So again, if you're not already using Webull, you can get 12 free stocks now, 2 for just opening an account, valued up to $300 each. And then if you deposit any amount, even a penny, you can get up to 10 more free stocks, each valued up to $3,000. So if you're not already using Webull, why not open an account, put a penny in, get your 12 free stocks. If you don't like the platform, you can always cash it out and use whatever platform you like. But again, it's our preferred platform for, again, market analysis, due diligence, as well as trading. So, and again, this is the online browser version of Webull. I'm on the market screen. I like to look at this histogram. As we could see, the number of decliners was greater than, or advancers greater than decliners, but the percent advancement was pretty small. So again, pretty neutral, pretty choppy. And again, we see, as we saw last week, the NASDAQ is underperforming the NYSE. So, and we kind of expect that in general going forward. Although, same way we talked about sector rotation, as the tech area gets beaten down, they make attempts to try to run it. So we'll see, these sporadic days where they start running tech, start pushing the NASDAQ out. But as you can see, it doesn't really tend to hold. So the macro environment is not conducive to tech in general, growth stocks. So again, I mentioned you can also see the earnings calendar here. If you hit the earnings and then the calendar and then earnings, you can see what's coming up near term. So I like to see that. Okay, what's coming up near term in terms of earnings, so you can prepare accordingly. It'll say, BMO before market open, or AMC after market close, or during market, etc. So I find that pretty helpful. It's a shorter list than the one in investing.com. So let's look at the best performing industries for the week. So we see utilities positive, coal positive. Coal had been beaten down, so again, rotation into coal. Packaging, retail, some retailers. Burlington had a run, I heard. Construction actually did well. So again, the sector rotation. Construction materials, mostly utilities. Get the ETFs. So the short China up on the Dow. Mid cap. Last week we saw mid cap, small cap potential. So again, there's that possibility of a rotation into mid cap, small cap. Up on the VIX, and again, we saw the VIX retracing, so we're starting to see some inflow into longing the VIX. And again, tomorrow we'll talk about our strategy for using UVXY to long the VIX going into the Fed decision on the middle of December. So again, small caps on the Russell, bullish on the Russell. and again short on China. So we heard lockdowns in China, unrest at the Foxconn with Apple, etc. So right now they're betting short China. Look at industries, got industrials, utilities again, basic materials we saw, consumer cyclical again. That's sector rotation. That's not macro wise. We don't expect cyclicals to do well. We expect defensives to do better, and you see defensives outperformed. We saw the rotation into real estate and financial services. And we'll talk tomorrow about looking for a top in financial services and how we plan on playing that. Commodities, here's a carbon credit one. Carbon, okay, so those are both, your greens. So there's a lot of inflow into those carbon credit ETFs. That's interesting. Again, a lot of carbon credit stuff. Coffee. Coffee was down quite a bit. That was interesting. We'll see that in the futures in a minute. High yield bonds, looks like foreign bonds, 7 to 10, 3 to 7. So short duration bonds. We did see kind of a recovery in the bonds. We talked about this for several weeks, though, that the Fed is going to raise interest rates, and now they're talking. They expect it to get at least in the fives. It's going to go 4.5 to 5%, maybe low fives. It's the current consensus, and so the bond yields are going to have to get into that range, 4.5 to 5, and right now they're under 4%. So there's a disconnect there that will have to get resolved, which will drive bond yields up, prices down. So again, we've talked about that for several weeks. So see the pound got some strength, all the foreign currencies got some strength against the US dollar, and again, we'll see that in the futures as well. Let me grab another drink sec. We'll jump over to the futures. I'll bring up those charts. Okay. I see you guys are chatting. It's great to see you helping each other out in our chat. Got a great community here. Anybody who's not already a member of our BeachBum trading community, we hope you will join us. Subscribe to our channel. Join us in our free Discord. Again, you can find the link to our Discord in the description box below. Again, help grow and support our great community of traders, great family. So if we look at the futures, again, we see the Dow is running up. It's broken out. It's running up nicely. S&P not so much. It's trying. Might roll over again. Nasdaq, is pretty flat, consolidated. Russell still recovering a little bit. See European markets broken out, recovered. The DAX German market. See the VIX, again, major retracement, reversion to the mean, headed down. You see it broke down below its lows of August and September, so it's down in the 20s now. Again, we see this big drop in oil again. So we saw one in October, went up over 90 again, and then dropped down to 75. So natural gas, again, jumped up to about 8 and then is coming back down. Again, both oil and natural gas, you can see how volatile it's been. We've had these big drops, and then we get these big pops, and so a lot of opportunities if you're a nimble trader. We've talked about this for a long time. Is which direction's it headed on a given day. If you follow the momentum, you can make good money. When it reverses, you can flip over. We've talked about the ETFs we tend to use on oil and natural gas. Oil is gush long, drip short, or UCO long, SCO short. Natural gas is boil long, cold short. So again, any given day, natural gas, can make a 10% swing, and you can make 10% if you're nimble. Oil's tends not to move quite as quickly, but it does have these precipitous drops. So just be careful. See, gold looks like it was declining, had a long tail, looks like a kind of capitulation, and looks like it's pushing up. Silver did. It looks like it might be stalling. Again, copper had a big drop and looks like it's bouncing. All the materials look like they're bouncing. And we got the treasuries. As we can see, they made a recovery from their lows. They're still working their way up. But again, interest rates are going to have to go up. So bond yields are going to have to go up. So there's going to be a correction in there. It may not be until the next Fed interest rate decision, or it may precede that, and they may start, inching the yield up. Particularly depending on the inflation data we get, the unemployment data we get. If it indicates the Fed might have to be more aggressive, more hawkish, then we might see the bond yields move up more quickly. So again, we see the dollar declined against the DXY, the Dixie index. The USD is down at 105 now. It was, up over 114, 115. So it is working its way down, and the expectation, we'll get some little run-ups, but the expectation is the dollar will continue to decline. So let's talk more about Cyber Monday stock market sales. So one of the things I did was I dug up a couple of my old videos on how to find cheap value stocks in FinViz and how to find cheap profitable stocks, because how do we find these sales in the stock market? So I started with those two, and you can see those. Again, those videos have been around for a while. I'll show you how to use the screener in FinViz to find cheap value stocks and also find cheap profitable stocks. So I combined those two to find cheap profitable value stocks. So I combined the two parameters in that, and I'll show you that in a second. We'll jump over to this screener in FinViz, and then we'll see that I found one potential stock market sale, and we'll talk about that one in more detail in a second too. So as you can see, the cheap stocks screener in FinViz uses a 90% or more below its 52-week high, so that tells me it's cheap. And if I want to know that it's also profitable, I can go over to the fundamentals and I can say, okay, the PE is greater than 0. So now we know, okay, here's stocks that are 90% or more below their 52-week high. So they're relatively cheap. And we know they're profitable. Their PE is greater than 0. And we come up with 34. And then we can whip through these. Some of these, you see the PE is greater than 0, but it's very high. So I wouldn't call those value stocks. PE is too high. Some of these are Chinese. We're not touching individual Chinese stocks. So then you can, whip through these, see what sector they're in. Is the macro environment supportive of the sector? Communication has not done well. So I just scrolled through these biotechs again. Here's some profitable biotechs, or so it says, according to their PE. And so I whipped through this list very quickly to see if there's anything that was interesting. Here's a Greek oil and gas. I didn't really look at that one. Looks like it's, again, you can hover over any of these and see a quick snapshot of the chart. Hey, is it, close to its a recent bottom, a recent support level? Do I want to dig into that in more detail? Yes or no, and you can click on it and see the whole chart. So again, I whipped through these guys and came up. I found this PW guy. It's a REIT, diversified power REIT. I thought, that sounds pretty interesting. It's only got a 5 PE. So I thought, let's look at that in more detail. Again, you can right click on any of these guys and bring up the details of their chart. Do your due diligence. This one happens to be not optionable. It says it's a REIT, so should be paying a dividend. It's not showing the percentage. It's very small, low float, no short interest. Looks like it's got, plenty of range. So I thought, that looks kind of interesting. And so it probably warrants some further due diligence, but I thought, okay, there's a way that you can find these sales is by combining these queries and look for cheap, profitable value stocks. Again, we want things that are making money, that are profitable, because we're going into a recession with high interest rates, and you don't want any kind of zombie stocks, zombie companies that are just able to service their debt, etc. We want people that are profitable. They're going to make it through the recession, and in an industry that's going to, at least fare okay, if not, perform well going through the recession. So this guy probably warrants some further due diligence, but it looked interesting, and I just wanted to show you, how to find things that are on sale using these various screeners in FinViz. If you have any questions about this after you've, seen the videos on how to use those screeners to find cheap value stocks, cheap profitable stocks, and now cheap profitable value stocks, or the equivalent of stock market sales, for Cyber Monday, etc., please let us know. Again, you can contact us in our Discord. Again, our Discord's free to join. You can find the invite in the description box below. You see the main channel is Beach Party. Thank you, Specula, for posting that reminder. And again, you can find an invite in the description box below. Also in the links section on our home page, which is beachbumtrading.com. Here's links to the Discord, our Facebook group, etc., all our social media. So any questions you have about anything in this video or trading, succeeding in trading, etc., you can hit us up, tag us in the Discord and the Facebook group via social media, etc. There's also links to all these tools. And references, business resources, etc., in the link section on our homepage. Again, beachbumtrading.com, bum without the U. And just another quick reminder, it's all those tools right now for Black Friday, Cyber Monday. There's several of these tools that are offering sales. So Benzinga is offering a sale 60% off. So you can see if we have channels for the various tools in our Discord. You can see the Benzinga 60% off Black Friday sale. You can use our link there. Also, Chartmill's having a sale now through Cyber Monday. And again, you can get up to 50% off Chartmill. You'll see in our due diligence videos, we use Chartmill for a large portion of our due diligence. So if you're interested in Benzinga Pro's sale, Chartmill sale, a lot of these tools, like I said, are having sales for Black Friday, Cyber Monday. So also just a quick reminder of our video about don't get hurt from the FTX bankruptcy fallout. I'll leave that there. Again, just reiterating, don't get hurt, don't get caught in this ongoing saga of the FTX bankruptcy fallout. So I'll take a few questions. If anybody has any questions, if I missed your question in the chat, I apologize, and please throw it back up. and we'll try to answer it. If you have questions or you think of something later, again, tag us in the Discord, ask your questions in the Discord and the Facebook group, via social media, etc. Hopefully you find all this information helpful. If there's something else we can do to make these game plan live streams more beneficial for you, if there's other ways we can help you succeed in your trading, that is our objective. That's why we're doing all of this, is to help you all succeed in your trading. Hopefully this gives you ways that you can see you can make money in any market. It doesn't really matter if it's a bull market, bear market, sideways market, whatever, choppy market. There's always ways to make money, and hopefully we can help you find those and succeed in your trading. So again, if there aren't any further questions, again, hit us up. Let us know. You can put them in the comments below this video in our Discord, etc. And then we'll come back tomorrow and we'll cover part 2. And we'll be looking for Cyber Monday stock market sales. We'll pick our individual stocks to put on our watch list and our bullpen and our shopping list for trading for next week, November 28th through December 2nd. And again, we'll talk about additional trade ideas, strategies, etc. for trading this week, and we'll talk about some of the option strategies that I've been using to generate additional income in kind of this choppy market we've been in lately, and hopefully that'll be more opportunities to make money trading going forward. So thank you all for joining us in the chat. Thank you all for watching this video, and we look forward to seeing you same time here tomorrow for part 2. Thank you and have a great day. Bye.